presentation, I'll be using the term assurance practitioner, but throughout, when I talk about professional accountant, you should read that in terms of our code as being assurance practitioner. I'd like to start by with listening to what Stavros Tomadakis, the chair of the International Ethics Standards Board of Accountants, has to say about the new code.
National Code for new international code for professional accountants. Out. It is also a principles code and a code that is much more enforceable. The new code of ethics is a restructured code, and it includes many important revisions as well. The restructuring of the code makes a clear distinction between requirements and application material. It gives much greater prominence to the fundamental principles, the conceptual framework, and the independence requirements.
Sorry, we have to. I don't think we can.
National Code for Accountants, new international code for professional accountants. Let me point out that it is also a principles code and a code that is much more enforceable. The code of ethics is a restructured code, and it includes many important revisions as well. The restructuring of the code makes a clear distinction between requirements and application material. It gives much greater prominence to the fundamental principles, the conceptual framework, and the independence requirement. So the restructuring, in effect, has given us a code that is much clearer, much easier to use, much easier to apply, much easier to translate. At the same time, the code has included considerable substantial revisions. Let me give some examples. The conceptual framework has become clearer and more robust. We have done important work on clarifying the safeguards and how the professional accountant will threat independence. We have included a new important standard on partner rotation. We call it the standard. And of course, we've also included the NOCLAR standard, which means non-compliant regulations, a very important new standard. It's already become effective. I must point out that the revisions in the code, parts which relate to a very important component of the profession, which is the professional accountants in business and government. So I would say that on the whole, the restructuring and the revisions of the international ethics amount to a very important contribution to the ability of professional accountants to act in the public interest and to maintain and increase trust in the accounting. It is important, of course, to know that this code, restructured as it is, facilitates implementation and the use of the code. And of course, we are very interested, and the board is going to be as helpful as possible to those who have to come now into picture. That is, those who make decisions about adoption. Includes standard setters, includes member bodies of EFAC, accounting organizations, it includes the Forum of Firms, it also includes regulators and other authorities in the world.
Just if it, sorry,
Okay.
sure.
We're going to stop that video there. We're actually trying to figure out if you guys can hear us all. So if you can't hear us, please ping through a question and just let us know. I'll carry on then. So the International Ethics Standards Board for Accountants released its new code in April 2018. The new code brings together several significant projects that have been undertaken over the last 4 years. The new code is principles-based and more enforceable. The restructuring of the code makes a distinction between requirements and application material. Requirements are labelled with R and use the word shall, while application paragraphs are labelled with an A. And they provide examples of actions the accountant or the assurance practitioner might take. The language in the International Code is now clearer. Where possible, duplicative material is avoided. Complex sentence structures have been simplified, and the passive voice, legal and archaic terms have been avoided. The new code gives much greater prominence to the fundamental principles, the conceptual framework, and the independence requirements. The enhanced conceptual framework includes clearer and more robust safeguards, including a revised definition of safeguards, and is more tightly integrated into relevant sections of the code. The restructuring has given us a code that is much clearer, much easier to use, and much easier to apply. Okay. The new code includes substantive revisions in the following areas. The conceptual framework is clearer and more robust. The new code clarifies what safeguards are and how the professional accountant can address threats to the fundamental principles, including independence. It includes strengthened provisions on long association and non-compliance with laws and regulations, as well as the recently completed revisions regarding inducements. There is also new guidance on professional judgment and professional skepticism. There are 4 parts to the code. Part 1 applies to all professional accountants or assurance practitioners and addresses compliance with the code, the fundamental principles, and the conceptual framework. Part 2, which was formerly Part C of the IESBA code and not included in PES 1, applies to professional accountants in business. The new code clarifies that Part 2 is also applicable to professional accountants in public practice, and I'll talk more about this shortly. Part 3, which was formerly Part B in PES 1 and the IESBA code, applies to professional accountants in public practice, and Parts 4A and 4B incorporate the international independent standards applicable to audits and reviews and other assurance engagements respectively. These were formerly sections 290 and 291 of PES 1. The International Code also includes a glossary with descriptions and definitions of terms which have a specific meaning. So central to the code is the conceptual framework. The professional accountant applies the conceptual framework to identify, evaluate, and address the threats to the 5 fundamental principles, which are professional behaviour, confidentiality, objectivity, integrity, and professional competence and due care, and also to independence. 5 categories of threats to the fundamental principles and independence have not changed. These are self-interest, self-review, advocacy, familiarity, and intimidation. Examples of self-interest threats include having a direct financial interest in a client, quoting a low fee which might make it difficult to perform the engagement in accordance with the standards, having a close business relationship with a client, and having access to confidential information that might be used for personal gain. A self-review threat might be, for example, the preparation of the original data used to generate records that are the subject matter of an assurance engagement. An example of an advocacy threat might be acting on behalf of a client in litigation or disputes with third parties. Long association with an audit client and having a close or immediate family member who is a director or officer of the client, are examples of a familiarity threat. And an intimidation threat might be being threatened with dismissal or being pressured to agree with client judgments. The conceptual framework is a set of dedicated provisions that apply to all professional accountants in all circumstances when dealing with ethics and independence issues. A conceptual framework is necessary because establishing an exhaustive list of facts and circumstances that might trigger ethics and independence issues is impracticable. The conceptual framework sits at the core of the code. It assists the practitioner in identifying, evaluating, and, when threats are not at an acceptable level, addressing threats to compliance with the fundamental principles and independence. The conceptual framework requires the assurance practitioner to exercise professional judgment, remain alert to new information and changes in circumstances, and to use the reasonable and informed third-party test. Users of the code are required to understand and apply all parts that are relevant. So for assurance practitioners, that will include parts 1, 2, 3, and either part 4A or part 4B. So part 1 is the fundamental principles and conceptual framework. Part 2, relating to professional accountants in business, will also apply, as all professional accountants in public practice are also in business. Now, part 2 sits outside of PES 1, so you will also need to be familiar with the code issued by the professional body. For example, the code issued by the NZ Regulatory Board for members of Chartered Accountants Australia and New Zealand. Part 3 is specific to professional accountants in public practice, and part 4, if you're performing an assurance engagement, you need to be aware of the independent standards, either part 4A for audit or review, or part 4B for other assurance engagements. The application of part 2 is a significant difference compared with the existing code. Previously, parts B and part C were seen as independent of each other. You were either in one or the other, either a professional accountant in business or a professional accountant in public practice. This is not the case anymore. If you are an assurance practitioner, you will need to be familiar with all parts of the code. The enhanced conceptual framework requires identified threats to be addressed in one of 3 ways: either eliminating the circumstances creating the threats, applying safeguards where safeguards are available and capable of being applied, or declining or ending the activity or engagement. The meaning of safeguards has been revised. Safeguards are defined as actions, individually or in combination, that the assurance practitioner takes that effectively reduce threats to an acceptable level. There is a distinction between safeguards and conditions, policies, and procedures, which in contrast to safeguards are routine in nature and may assist the professional accountant in identifying and evaluating threats. The conceptual framework clarifies that the conditions, policies, and procedures that are established by profession, legislation, regulation, the firm, or the employing organisation to enhance professional accountants acting ethically are not safeguards because they are not specifically designed to deal with a particular threat. In line with the new definition of safeguards in the conceptual framework, the examples of actions that might be safeguards in the non-assurances services section of the code are much clearer and much more closely aligned to the specific category of threats. The code clarifies that in some situations, safeguards are not available or not capable of reducing the threats that are created by providing non-assurance services to assurance clients to an acceptable level. And if the threats cannot be eliminated, the firm or network firm must decline or end the non-assurance service or the assurance engagement. Emphasising the need for a careful thought process when applying the enhanced conceptual framework, the assurance practitioner is required in all 3 stages of the conceptual framework, that is in identifying and evaluating and in addressing the threats, to exercise professional judgment based on an understanding of known facts and circumstances, to remain alert for new information and to changes in facts and circumstances, and to use the reasonable and informed third-party test. The professional accountant's understanding of the facts and circumstances and the professional accountant's exercise of professional judgment are both critical to determining the appropriateness and effectiveness of a safeguard. The reasonable and informed third-party test is a consideration by the assurance practitioner about whether the same conclusions would likely be reached by another party. It is applied from the perspective of a third party who is objective and who weighs all the relevant facts and circumstances that the accountant knows or could reasonably be expected to know at the time the conclusions are made. The reasonable informed third party does not need to be an assurance practitioner, but would possess the relevant knowledge and experience to understand and evaluate the appropriateness of the accountant's conclusions in an impartial manner. Okay, I had planned to share with you some thoughts from Gary Hannaford, the chair of the IESBA Safeguards Task Force, explaining the key revisions to the conceptual framework and enhancements in relation to safeguards throughout the code, but I have just heard that there were some issues with the reception of the first video breaking up all the time. So we're going to skip over this next slide. Okay. So looking now briefly at some of the substantive revisions to Part 2 of the International Code. And remember, Part 2 relates to professional accountants and business, and these provisions are not in the proposed exposure draft of Professional and Ethical Standard 1. So the NZ AUASB mandate addresses assurance practitioners performing assurance engagements, and that's why these are not included. But if you're in public practice, as I mentioned earlier, you will need to be familiar with these new provisions. So the changes to the provisions pertaining to professional accountants and business include more comprehensive provisions addressing the professional accountant's responsibilities when preparing or presenting information, a prohibition on exercising discretion when preparing or presenting information with intent to mislead or inappropriately influence contractual or regulatory outcomes, and enhanced guidance to assist professional accountants in disassociating from misleading information. The changes also include prohibitions on allowing pressure from others to result in a breach of the fundamental principles, a prohibition on placing pressure on others that would lead them to breach the fundamental principles, guidance to assist in navigating situations involving pressure, and some practical examples. The International Code includes revised requirements and guidance on inducements, including gifts and hospitality, that apply to both professional accountants in business and professional accountants in public practice. The new code clarifies appropriate boundaries for the offering and accepting of inducements and guides the behaviours of professional accountants in all situations involving inducements. Central to this framework is the new intent test that prohibits the offering or accepting of inducements where there is actual or perceived intent to improperly influence behaviour. So regardless of the size or nature of the inducement, if there is improper intent, offering or accepting the inducement is prohibited. When there is no improper intent, the conceptual framework applies. So the assurance practitioner needs to identify, evaluate and address the threat. You also need to remember to apply the reasonable and informed third-party test. Thinking about appearances. For example, a client might offer you tickets to a sporting event. Given the facts and circumstances, how would accepting those tickets look? The long association provisions apply to Part 4A of the Code, that's independence for audit and review engagements. There have been some significant changes in this area, which were the subject of a webinar in their own right back in June when these proposals were finalised. The long association provisions apply to audits of public interest entities, that is, those entities required to apply Tier 1 accounting standards. The maximum time on for key audit partners is 7 years. That hasn't changed. However, the cooling off period has changed and ranges from 2 to 5 years, depending on the role the key engagement partner has played. The NZAU-ASB has issued a series of frequently asked questions to assist with the implementation of these provisions, which are available on the XRB website. On the Standards for Assurance Practitioner page, you need to look under Other Information and then Auditor Rotation. There are also new restrictions on activities during the cooling off period. These include acting as a client relationship partner and undertaking any other role or activity that would result in the individual having significant or frequent interaction with senior management or those charged with governance, or directly influencing the outcome of the audit. So cooling off really does mean cooling off. The new code strengthens the guidance on non-assurance services. Before accepting an engagement to provide a non-assurance service, the assurance practitioner needs to determine whether providing such a service would create a threat to independence. The prohibition on assuming a management responsibility is now more prominent. The assurance practitioner is not permitted to assume a management responsibility for an audit or review client. For another assurance engagement, the assurance practitioner is not permitted to assume a management responsibility related to the subject matter or subject matter information of an assurance engagement provided by the firm. The existing prohibitions on provision of certain non-assurance services for audit and review engagements are retained. In addition, the prohibition relating to recruiting services is expanded to all audit or review clients, so that's not just PIs as in the current code. For other assurance engagements, the firm is prohibited from assuming a management responsibility and must apply the conceptual framework to determine whether accepting a non-assurance engagement might create a threat to independence. Okay, as I noted earlier, Part 2 of the new code applies to professional accountants in public practice or assurance practitioners. There are no longer separate and distinct provisions for professional accountants in business and professional accountants in public practice. And this recognises that the assurance practitioners have a relationship not only with the client, but also with their employing organisation, whether as a contractor, an employee or owner. Examples of situations in which the provisions of Part 2 apply to a professional accountant in public practice or assurance practitioner include facing pressure from an engagement partner to report chargeable hours inaccurately for a client engagement, preparing or presenting financial information for the assurance practitioner's client or firm, or being offered an inducement by a supplier of the firm. New guidance has been added, emphasising the importance of obtaining an understanding of the facts and circumstances when exercising professional judgment and how compliance with the fundamental principles supports the exercise of professional skepticism. The International Code highlights the importance of professional judgment in identifying, evaluating and addressing threats in order to make informed decisions and to obtain an understanding of specific facts and circumstances, including the nature and scope of the professional activity, of services and the interests and relationship involved. New material has been added to the International Code to help professional accountants better understand what to consider in exercising professional judgment. This new material is intended to make more explicit procedures that professional accountants should already be performing under the current code and is expected to ensure that professional accountants exercise professional judgment in a more consistent manner. Recognising the public interest in promoting the application of professional skepticism in assurance engagements, guidance has been added to the International Code to explain how compliance with the fundamental principles supports the exercise of professional skepticism. So the effective date. Parts 1, 2 and 3 of the International Code are effective on 15 June 2019. Part 4A is effective for audits and reviews of financial statements for periods beginning on or after June 15, 2019. And Part 4B is effective either on 15 June 2019 or for subject matter covering periods for periods beginning on or after 15th of June 2019. These effective dates do not override the effective dates of the non-compliance for laws and regulations and long association provisions drafted under the former structure and drafting conventions. Non-compliance with laws and regulations was effective on 15 July 2017, and the long association provisions become effective for periods beginning on or after 15 December 2018. And the proposed effective date for Professional and Ethical Standard 1 is the same as the international dates. So that's 15 June 2019. All right, so to summarise, the entire code, the International Code, has been restructured and rewritten to make it easier to read, understand, apply and enforce. Substantive revisions to the code include an enhanced conceptual framework, which includes extensive provisions to safeguards throughout the code that are better aligned to threats. Strengthened independence provisions regarding long association of personnel with audit clients, as well as strengthened provisions relating to offering and accepting of inducements, including gifts and hospitality. Strengthened provisions dedicated to professional accountants in business, including a new section relating to pressure to breach the fundamental principles, and revised provisions relating to the preparation and presentation of information. Clarification about the applicability of Part 2, Professional Accountants in Business, to professional accountants in public practice or assurance practitioners. And new material to emphasise the importance of understanding the facts and circumstances when exercising professional judgment, and to explain how compliance with the fundamental principles supports the exercise of professional skepticism in assurance engagements. I'd like to acknowledge here that the preceding slide set was prepared by the IESPA staff and used with their permission. If you're wanting to find out more about the changes at the international level, there is a lot of good information about the new code available on the IESPA website. Okay.
That's at the end.
Okay. All right. So now let's have a look at the New Zealand specific changes to the International Code. The NZAU-ASB has developed an overarching strategy that sets out the principles of convergence to international standards. These principles require that the international standards should be used as the base for the New Zealand standards and should only be amended if there are compelling reasons to do so. Compelling reasons for modification of an international standard may arise when the international standard does not reflect or is not consistent with either New Zealand regulatory arrangements or principles and practices that are considered appropriate in New Zealand, including the use of significant terminology. And under each category, we have a list of criteria that the board considers has to be met before a change to the international standard is made. New Zealand paragraphs are clearly identified with the prefix NZ. Okay, the New Zealand specific changes are also described in a conformity with international requirements section, which comes at the end of the standard, or in the case of an exposure draft, or exposure draft in the case of a proposed standard. So in the proposed PES1, the NZAUASB has made a number of compelling reason changes that they've brought forward from the existing code. The first relates to the scope of the code. Because the NZAUASB mandate is limited to assurance engagements, the scope of PES1 differs from the International Code. PES1 does not include Part 2 or any references to Part 2 or professional accountants in business. In addition, Section 321 on on second opinions is also deleted because a second opinion engagement is not an assurance engagement. We have some stricter requirements for dealing with conflicts of interest. In New Zealand, we always require disclosure in writing to a client or potential client where a conflict of interest has been identified. The New Zealand Code also requires an assurance practitioner to disengage from a relevant assurance engagement if adequate disclosure to the client is restricted as a result of confidentiality requirements. The International Code permits the firm to accept or continue the engagement when specified circumstances exist. PES1 contains stricter provisions around accepting or paying referral fees or commissions than the International Code. In New Zealand, such fee arrangements are prohibited, recognising that a fee arrangement in connection with an assurance engagement creates a threat to independence that no safeguards could reduce to an acceptable level. The New Zealand Code is explicit in its requirement that the assurance practitioner evaluate multiple threats to independence in the aggregate, which individually may not be significant. PES1 extends the prohibition on a firm from providing assurance services to an entity if the partner or an employee of the firm serves as a director or officer of the assurance client, to include serving as a liquidator or receiver. This change is consistent with New Zealand legislation. Part 4A of the International Code, which applies only to audit and review independence for audit and review engagements, to report on a complete set of financial statements or on a single financial statement, is extended in New Zealand to also apply to offer documents. And reflecting New Zealand business practice and legislative environment, a number of definitions have been revised or added in PES1, and a number of the defined terms have been tailored. So that's what's been kept the same. Now we'll take a quick look at the New Zealand specific paragraphs that the NZAUASB has determined to remove from or not to carry forward through into the revised code. So the NZAUASB has determined that a number of the requirements no longer meet the compelling reason test, and therefore these New Zealand specific paragraphs have not been included in the proposed new code. The most significant changes between Extant PES1 and the proposed New Zealand Code, as they relate to other assurance engagements, so that's Part 4B in the new code or Section 291 in the old code, are in the areas of non-compliance with laws and regulations, breaches of independence, and public interest entity requirements, including long association and temporary staff assignments. So looking firstly at non-compliance with laws and regulations. Currently in PES1, we have the same framework for dealing with identified or suspected non-compliance with laws and regulations for audit, review and other assurance engagements. In the International Code, there is one framework for audit and a separate framework for review and other assurance engagements, and these together are referred to as non-audit services. So the reason given by the IESBA for not aligning the no-CLAR requirements for audit and review engagements is because the provision of review engagements varies significantly around the world, and that audits tend to be more significantly legislated or regulated than other assurance engagements. So in the proposed New Zealand Code, we've proposed the same framework for addressing non-compliance with laws and regulations for audit and review engagements, and a similar but separate framework following the international standards for addressing non-compliance with laws and regulations in other assurance engagements. In New Zealand, the legislative environment allows for some entities to have the financial statements reviewed rather than audited. This is one of the main reasons for the NZAUASB aligning the framework for audit and review engagements as it relates to non-compliance with laws and regulations. It also keeps the code simple and is consistent with the independence requirements in Part 4A, which address audit and review engagements. A key difference here is that, unlike for audit and review engagements, where you must discuss identified or suspected non-compliance with management and, where appropriate, with those charged with governance, which is consistent with our current provisions, for other assurance engagements, you need only discuss identified or suspected non-compliance with those charged with governance if you have access to them. Another key difference for other assurance engagements is that documentation is encouraged. The assurance practitioner is encouraged to document the matter, the results of discussions with management, those charged with governance and other parties, how management and those charged with governance have responded to the matter, the actions the practitioner considered, judgments made and the decisions that were taken, and how the assurance practitioner is satisfied that the public interest responsibilities have been fulfilled. In an audit or review engagement, documentation of these matters is required. So this is an area that the NZAUASB is really interested in obtaining stakeholder feedback about, whether or not you agree with the simplified framework for other assurance engagements. Okay, looking now at breaches of independence for other assurance engagements. In PES 1, section 291, independence for other assurance engagements, were aligned with the more prescriptive requirements of section 290, which is independence for audit and review engagements. In the new code, the NZAUASB has proposed not to align the requirements of Part 4B, that's other assurance, with Part 4A, audit and review. That is, we will continue to follow the international provisions. Part 4B, for other assurance engagements, contains an abbreviated framework which is more principles-based than the framework for audit and review engagements in Part 4A, in terms of the specific matters to be communicated and who you can communicate with. One specific area that we want to bring your attention to is the requirement to communicate when there is a breach of independence. In an audit or review engagement where there is a breach of independence, the assurance practitioner is required to communicate with those charged with governance. However, in the proposed new code, in respect of other assurance engagements, when there is a breach of independence, the assurance practitioner is required to communicate with the engaging party or those charged with governance. The new code requires the assurance practitioner to use professional judgment in determining the appropriate party to communicate with. This principles-based approach recognises that assurance engagements have varying subject matters and subject matter information, and therefore the communication needs may differ from a traditional financial statement engagement. This change is also an area where the NZAUASB had extensive debate, and again, we're really interested in hearing views from stakeholders, particularly whether or not you agree with the communication requirements. So in relation to the public interest entity requirements, certain provisions that were in section 290, again, independence for audit and review engagements, were added into section 291, independence for other assurance engagements, in our current PES 1. These provisions relate to prohibitions on providing valuation services, certain IT system services, and certain recruiting services to a client that is a public interest entity, or PI. There were also strict rules relating to the relative size of fees when the client is a PI and long association with the client. In the proposed PES 1, the new code, the NZAUASB has not proposed to include these rules-based provisions in Part 4B in relation to independence for other assurance engagements. Instead, the assurance practitioner will apply the conceptual framework, identifying the threat, evaluating the threat, and addressing the threat, either by eliminating the threat, applying safeguards to reduce the threat to an acceptable level, or withdrawing or declining the engagement. And remember also the reasonable and informed third-party test, a consideration of whether the same conclusions would likely be reached by another party, weighing all the relevant facts and circumstances that the assurance practitioner knows or could reasonably be expected to know at the time the conclusions are made. Relying on the conceptual framework recognises that new business practices, the evolution of financial markets, and changes in information technology are among developments that make it impossible to draw up an all-inclusive list of non-assurance services that might be provided to an assurance client. So I'd like to finish off with summarising the proposed changes to the New Zealand specific content. So that's the no-car provisions for audit and review engagements have not changed. For other assurance engagements, the framework for addressing non-compliance with laws and regulations is proposed to be aligned with the International Code. While the frameworks are similar, a key difference is in the requirement to discuss identified or suspected non-compliance with management and, where appropriate, those charged with governance, if the assurance practitioner has access to them. Also, the encouragement to document rather than a specific documentation requirement. The framework for addressing breaches of independence is proposed to be aligned with the abbreviated framework in the International Code. The frameworks are similar, with the major difference to the framework for addressing breaches of independence in an audit or review engagement being that the other assurance framework is more principles-based about the specific matters to be communicated and who the assurance practitioner communicates with. For other assurance engagements, breaches of independence are discussed with either the engaging party or those charged with governance as appropriate. And in respect of independence for other assurance engagements, Part 4B of the proposed PES1 follows the International Code. The stricter PI provisions previously introduced to Section 291 of the Extant Code have not been carried forward to the proposed PES1. Rather, the assurance practitioner will need to apply the enhanced conceptual framework to identify, evaluate, and address threats to independence, bearing in mind the reasonable and informed third-party test. Further information about the proposed new code and changes to the current code, including how to submit comments, is available on the XRB website under Standards for Assurance Practitioners, Standards and Development. We're really interested to hear what stakeholders have to say about the proposed code, specifically in terms of the New Zealand content. I'd like to thank you for joining me on this Code of Ethics update today. We will have a link to the recording of this webinar available tomorrow to all those who have registered, and a link to the IAASB videos not shown today will be made available to you all as well. Okay, thank you for joining me.